So is the UK overdoing it when it comes to rate hikes or not? And with Bank of England coming out hawkish in this forecast, does it make sense to continue it? Because I thought inflation was coming down. I thought that was the narrative in a lot of these media, social media posts, some realtors out there, things are getting better, etc., etc. But not what this article says here. And I'll explain it in a second, but my name is Daniel. I run an organization called etfs. I teach and promote financial literacy, teach you about macroeconomics related to the financial markets. And if you like content like this, subscribe to the channel, hit the like button, bell icon to be notified on the next video, and comment below your thoughts as well as you watch this video. Now, let's get into the article. I'll post the article in the description for you to read up on it. But it basically says, Bank of America expects another UK rate hike after hawkish Bank of England forecast. Economists at Bank of America are now predicting another rate hike from UK Central Bank in June, after policymakers warned Thursday of persistent food inflation. Definitely, you go into the groceries, you see inflation is still high up there. The prices are still hurting a lot of the consumers. And now you have Bank of America expecting that another rate hike from the UK Central Bank is very possible, which would probably put more strain on not only businesses, but in also consumers when it comes to rates, loans, mortgages, and so on. And the article goes on and says that Robert Wood, chief UK economist at Bank of America, said the change of call came after Bank of England published a more hawkish than expected forecast in its monetary policy report. But after Bank of England raised rates again on Thursday, Wood said he was anticipating further 25 basis point rise for June, taking the terminal rate to 4.75%. He added that he had low conviction on this timing and level since Bank of England left all options open. And you're hearing that. You're hearing that with also the U.S. Federal Reserve keeping the options open in the U.S. when it comes to hiking rates. They can continue higher. And you heard from some of the Fed members like Bowman saying that, hey, we may need to hike more, especially if the data is not coming down and inflation continues to be persistent and sticky. And we're in the stage right now where inflation is sticky. It's not coming down to the 2% target. Remember, the central banks have a target. That target is 2%. They want to bring it down, and they will do things at any cost, which is hiking rates further, creating tightening conditions, which will then eventually lead to some sort of hard landing or crash. And we're already seeing the pains. The pains have come out, and a lot of people in the UK are feeling the pain. You're hearing a lot of the first mortgage payment, the first rent, for the first time, these mortgage payments and rents are being missed. You know, they haven't been paid, or people defaulting, and you're seeing the pain already, yet the expectation of another rate hike is likely to come, according to Bank of America. And it's going to be key to continue to watch the data points and the inflation. We saw also German CPI coming in line, US CPI coming in line, which is showing that stickiness, which is showing that it's hard for it to come down. And when you have the growth data or the jobs data still resilient and strong, then that means that things need to go further in terms of tightening or keeping conditions tighter for longer. And even if they don't hike rates in the next meeting, definitely there would be a pause that could last 6 months to who knows when, maybe a year or so, if nothing breaks. Now, if you remember last year, we had some problems with the UK pension funds. And I did a video there. You can just search up on the channel UK pension funds, and I explained the whole deal with the LDIs and how that's a big problem. Now, if we had a problem back then with the rates and rates continue to move up higher, it'll be interesting to see if that problem comes back again in the economy and if something else bigger breaks, which could cascade into other economies, not just it would not only be just in the UK, but many other economies as well. So very interesting to see that this hawkish twist, that the expectations that people are expecting rate cuts or some sort of easing. Well, guess what? It looks like it's not coming true, and it looks like that the central banks are staying adamant. And when is it? When is it that a lot of the market participants are going to realize that, hey, these guys are really serious in bringing inflation down, which means that they're serious in bringing pain in the economy, which means that, hey, they want to bring the job numbers down. They want to bring the unemployment rate higher. They want people to lose their jobs, which means pain for the consumers and the businesses. Anyways, you guys let me know. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers. Bye.